Hello everybody, welcome back to the channel. Today I thought I'd try a different type of video. I'm going to go over 3 option plays that I'll have on my shopping list for this coming week. And just kind of break down what I'm looking at during these trades. So first off, I have NIO over here. And as you know, this is a stock that's very volatile. Just looking at the chart, you can see it's down to 18 bucks in the 1 year chart, all the way up to 66. So that's a pretty big range that's been trading through. Right now, it's in a current downtrend, and it has earnings on 11/17. So a play I'll be looking at would be something that ends before that date. And seeing this downtrend, I want to try to get under that, or stay under this line here going forward. And another thing I'd like to look at is the volume profile and see where that next level of support is if I'm wrong, or at least where it's going to slow down because there'll be a lot of price action. And that looks like it's going to be in the 28 range over here. So that's where like the stock price might, if it's going down, it might slow down in that area while people contest right there. So I want to be below 28 if I can. Going back about a year, there's a very weak support line here at the 32 mark, or 31.40 here, that I put on. And if we look at a Fibonacci, I'm going to go ahead and draw that real quick. Drawing Fibonacci, and I want to kind of throw this about here. So looking at the Fibonacci's, it looks like it does bounce off them pretty frequently, and it's a pretty tough drop to get down to that 100% here on the Fibonacci. So again, another confirmation of like staying above or staying below this level of support is where we want to be. We're going to be selling a put spread on this. And the reason you just heard me say put spread is because this is not a stock I would want to actually own. Just taking this company and comparing it to another car company like Ford, if you look at the market cap, they're about the same. But just look at like the car sales for like the month of August, and you can see that NIO only sold about 6,000 cars, whereas Ford has sold 124,000. And then if you compare the revenue between the two, it's no comparison. Like Ford is pumping out 140 billion per year minimum, while NIO is barely getting about 15 billion in revenue. Sure, it's a growth company, but it's not one that I'm willing to pay that premium on. So when I'm putting on this trade, I'll be looking at doing a put spread. And you know me, I like doing 30 days out about, and that's well before the earnings here. So let's go ahead and go to the trade. And for NIO, I think I want to start with the 33 day here. And I said I want to be below 28. So let's go ahead and make a put spread here. So maybe the 27 here, 87% probability of being out of the money. So that's a pretty good percent. Something I'm willing to risk on a trade like this. And then because I don't actually want to own this, I'm not sure if I want to roll it indefinitely, I maybe turn this into a spread, but I'm not going to do one wide because you only get $5. $5 on a $100 risk. I mean, that's 5%, pretty good, but still. I think being at the 27 strike is pretty safe, so I'm willing to do like a wider spread, but I do want to buy that insurance above it or below it, I guess. So I'll be looking at the 24. No, let's go 23. 23. We'll do the 23. So that's a $4 wide spread, which means that my max risk is going to be $400. And my credit received is going to be the difference between the two. So this might get filled at 34 cents. This might get filled at 15. Let's just call it 14. So that's 30 cents per contract I put on. And this is something I might be putting 2 on. If we want to see what that looks like, let's go to the Analyze tab, Add Simulated tab, Trade. And I said I'm going to do the 27. Oh, wait. I was looking at August 29th. Let's get the right date. So we're going to sell this guy. We're going to buy the 23. And then I like to look at the mid price. So between here, we'll say that's what, 33. And then between here, we'll call that 15. And risk profile. And you can see I'd make $19 on $400 risk. If we look at a calculator real quick and do 19 divided by 400, 4.7% return on this trade. And I'm going to be doing 2 of these, so my net profit is going to be double what's on here. So what is that, $38? That's almost enough to fill my car with gas for the month. So thank you, NIO. I think this is going to be a nice simple trade to put on. Next up, I wanted to actually do Campbell's Soup. So again, these aren't huge like home run plays. I'm more about picking up the small wins, and they add up over time. Bring up the chart real quick. So Campbell's Soup, we can even go to the 2-year frame on this one, and you can see like it's rarely below 45. It's even rarely below 40. Like this current price at 42 is very close to the all-time low for 2 years. Okay, so just keep that in mind when we switch back to the 1-year chart. We don't have earnings until 12/1, so we got some time that we could put this trade on. And pretty much what I'm going to be doing is selling a put. Like, this is actually a stock that I'm not afraid to own. Like, Campbell Soup's a good one. It's a dividend payer. We can run the stock repair strategy on it if we get assigned and we're doing the wheel and we fall below our cost basis. But it's near all-time lows for the 2-year mark. I think it's a pretty safe play to put on. So let's go ahead and look at the trade. Looking at the, since it's earnings is not till 12/1, I'm fine with going further out on this one to get a little bit more premium. Like, this is a safer play that can sit there and burn for a little bit. And I want to be at the $40 because, well, that's the all-time low. And if it does dip below that, I think we can roll with it. So I'll be looking at the November 19th 40 strike. And we should be able to fill around 62 cents. That looks like that's what the last fill price was. So for $400 risk, you're getting $62 back. Although it's going to take a little bit longer to burn. This is when you just sit there and let burn and cook away. Campbell Soup might even jump up and get you more high percent profit before the expiration date, in which case you just take it off. But as this contract comes closer in time, you're going to see theta go up, and you're just going to collect this money and not do anything for those 2 months to get it. A pretty easy trade there. I'll throw it up in the Analyze tab real quick so you can see what that looks like. If you don't want to wait so long, you could do the November 5th 40. That still pays pretty well. That's 1% return on 40. You know what? Actually, that's probably what I'll go with. 40 days out. Get that 1% return for 40 days. I'm fine with waiting an additional week since I usually do 30. So actually, let's change that. We're going to switch this to November 5th here and sell this guy. And we should probably get a fill around 45, I would imagine. But I'd be fine with 42 on a 40-day hold. And this is what the P&L looks like. Again, if it expires above 40, you get max profit. Which, if you look at this bottom left corner, the blue number is $45. That's what you sold it for. Our break even would be $39.57. If it gets down to there, we could roll it pretty easily. So Campbell Soup, this is another one I'm going to put on my watch list. Then the last one I wanted to look at was Workhorse. And this is a very volatile stock, but it's such a low value that the amount risked per trade is very minimal. I say this is risky only because if you look at the 2-year chart, like, this stock was trading at $1.32. So I like to assume the worst, so let's assume that it goes back down there. If we sell a $6 put and it goes down to $1.32, we lose about $470 minus whatever premium we receive. So that's kind of like the risk factor on this one. So it's a small risk-reward scenario here. Let's go back to the 1-year chart because that's what I like to look at during these videos. Earnings play is 11.8. I don't like to hold during earnings. Who knows if it's going to go up or down, even if it has good or bad news. And it looks like the low is actually where it's at now. The RSI indicator is actually below the bottom line here. And if you look through the past here, anytime it goes below there, it does get a bump. So that's pretty nice. Another indication that this could go up, so I'm fine with selling a put here. And even though I wouldn't really want to own the stock here, I'm fine with that max loss scenario on this guy. So let's go ahead and look at the trade. I want to make sure I'm a before earnings, which I think we said was 11.1, right? Let's go back here 1 second. Sorry about this. 11.8. So want to be before these strikes here. Let's go ahead and look at the 33-day here. And I was already kind of saying what the play was going to be, about $6. And if you look at the return here, we're getting about 28 cents per 600 risk. So that's a pretty nice return. Let's go ahead and pull up that calculator. And if you want to look at that real quick, we'll say we get filled at 27. Divide by the amount of cash being risked. 6 times 100 is 600. And that's another 4.5% return, about a 33-day hold. And this guy is at 72% probability, but I think we're safer than that because of the chart, and we're not near the earnings play right there. I'm going to go ahead and throw this into the Analyze tab real quick. If you don't know what this looks like by now, okay, so sell. We said we'll probably be looking for a 27 risk profile. You should already know what this looks like because you've been watching this channel for a while, most likely. If it stays above $6, we make 27 per contract. If it goes down to 573, that's where our break even is, and we can roll or take assignment of the shares at that point because it's shown in the past that this ticker can take off. So maybe I wouldn't mind holding the shares, but max loss on this play is about $400, so it's a nice little play to pick up a 4% return. I'll be looking at putting on 2 of these contracts, another $60, so that's pretty cool. I think that pretty much wraps this up. If you like this video, go ahead and like and subscribe, and see you guys next week. Good luck.